What's up, traders? Ah, good morning. It is a beautiful morning today. Um, in this video, I'm gonna go over my strategy, the way I trade, what I see in the charts, and then at the end of the video, I'll put yesterday's recap um, on today's video. So this might be a long video, but I'm gonna explain the way I trade, why I trade it, and one of my favorite setups, shorting penny stocks. Um, so let's get into it. So I'm gonna use this EYEG as an example. This is the way that I never traded this stock yesterday. I had a lot going on. I missed out on a play that I wanted to do this morning, but this is the way that I trade. So with this first strategy, this only will work with pretty much penny stocks because they only respect um, the trend, I guess is what I'm going to say. So bear with me. This can be a long video, but for anybody out there that wants to know how I trade, I'm going to try to explain it thoroughly in this video. So, EYEG. So, why would I want to short this stock? Okay. So, if you're looking at it this morning, you can see obviously this stock is gapping up. So, that's very bullish. But, this is one of the certain strategies that I'll use. So, I'll go back to the 1-year chart. Like I say, this strategy that I'm about to show you only works on the penny stocks. So go back to EYEG's chart, and you look throughout the chart, and then you tell yourself, okay, when this stock gaps up and it's a massive gap up, how does this stock normally react? How does it normally close? How does it normally run? So right here, we're gonna go with this example because this right here is pretty much the same as this right here. So on this day right here, on 6/3, you can see right here the stock gapped up. The stock closed on 5/31 at $3.77. The stock opened up the next day and it gapped up higher. You can visually right here see there's a gap. So right here, you're going to ask yourself, how does this stock normally trade when it gaps up? Okay. It normally tends to close weak and gets crushed. So if you come over here, you have a massive gap up. So if I was shorting the stock, I would be betting on this same pattern. I would be betting that the stock's going to do this over here as it did today. That's exactly how I would trade this setup. Now, a lot of these stocks, if they gap up, you have to see how they react on massive gap ups. Like this is a massive gap up for this stock. You know what I mean? You have these little multi-day runners. You have this little gap up, but this is a massive. This is massive. This is massive. So I would be looking at this right here to predict how this stock is going to trade today. So on this one, that's exactly how I would have traded it. Is that I would have probably been shorting somewhere in here. And once it cracks 863s, the stock's pretty much done. And you can break pre-market highs. So, that's exactly how I trade this strategy. So, what do I think is going to happen to this stock, EYEG, on Monday morning? I think the stock's going to get crushed. So, this is going to be my top play to short this. And now, this is where it comes into a different strategy. So, look at the 1 year. So, we'll get rid of Get rid of this drawing. We're going to zoom in to the next drawing. So right here. So this massive gap up. Now look at this day right here. This candle right here. This is what I expect for the stock to do Monday morning. Okay. So for this to meet my standards on Monday, what does this stock have to do? This stock has to show me a gap down. If this stock shows me a gap down Monday morning, right here is what I expect for this stock to do Monday morning. Is that I expect the stock to fill this gap or get close to filling this gap. Why? Because that's what the chart tells me. I trade off the chart, and I'm going to explain it in a lot of examples. There's no like, oh, I think the stock's going higher. I think this. All I simply do is I literally look at the charts, and how I have such a high win rate is because all I do is look at the charts, and I let the chart tell me exactly what the stock should do the next day. That's it. So on this strategy, on this gap up, you have to look at what happens in the past to tell what's going to happen in the future. That's as easy as that. And this only works on penny stocks. But a couple other strategies that I use, like this gap down first red day. Now this strategy, the gap down first red day, can work on any stock. It doesn't have to be a penny stock. But this one right here, if this stock gaps down Monday morning, I expect this to happen. If this does not happen, then I get out of the trade. So Monday morning, this stock closed at $7.09. So let's just draw a line. So $7.09. Whatever. Monday morning, if this shows massive gap down, my rule, the way I trade this, is my stop price is 709. And then it doesn't mean like, okay, it hit 709 and I stop out. I wait usually like 5 minutes to see how the stock reacts at the previous day's closing price. If it's bearish, I keep holding. But if it never even gets up to 709, then I'll never get out of the stock. So this is one strategy. Is this my favorite strategy? Nope. But the gap down first red day, I'll show you. This right here, after it has a massive red day, and then it has a gap down, that is my favorite strategy. That has a 90% win rate. And I have a million videos to prove that strategy works. So the gap down. So I'll explain this one real quick. So what you want to see is like EYEG did today. You want to see a massive gap up, and the stock's got to close weak. Once the stock closes weak, you wait for the next day. If it has a gap down, that is my favorite strategy. Why? Because it's super bearish. So you wait for that massive gap down, and then you get in around the open price. And then for me, I would almost hold it to close, or I hold it for the first 1 to 2 hours, depending on how the stock goes. If it keeps showing me a downtrend the whole single time, I'll never get out of my position. But if it crashes within the first half hour to an hour, then I'll probably get out of the position. I pretty much hold them until old resistance becomes new support, and then I'll cut the trade, because then the trend changes. But this gap down first red day is what you want to see on that's my favorite strategy. I can show you another example. Let me just find it here. Just bear with me. Like I say, this video might be long. MYOV. Okay. So go to time frame. Actually, we go right here. So get rid of all these lines. So right here, MYOV. Gap up, close weak. Next day, closes pretty weak. Right here, gap down. So this stock had a gap down, and that was on 11/21. So go to entry. 4 days. So right here, you can visually see that this stock had a gap down. I mean, a gap down is that when this stock opened, the previous day closing price, it gapped down from that price. So right here, you can see a gap. That's the gap I'm talking about. So when the stock opens up the next day, you visually want to see that this had a gap down, and then that's super bearish, and it never filled this gap. So there's a empty space waiting to be filled. And how this is so high probability is that first the stock got crushed, right? It closes red. First red day is right here. The next day you wait for the stock to open. Once it opens, you want to see visually a gap down. Once you see that gap down, that pretty much seals the deal. So this has a 90% win rate. So at the open, you can either start pre-market shorting, or you can wait till the open. Sometimes I'll short pre-market, sometimes I'll wait till the open. So how this has such a high win rate is that it had a massive red day. The next day it has a gap down. So anybody that's long in this position at this point just wants to get out of the position. They're done with it, and the shorts are going to come in. The volume's dying. So it's really simple. So you start taking position around the opening price. So the opening price somewhere down here. Looks like it opened, let's see, at $12.25. So you have opening price, you have your order somewhere in here. And you can either take your profits right here, or you wait for the stock to show you when to take your profits, like right here. Sorry. I'm on the... So right here is when the trend changes. It bottoms out, and then you're starting to make higher lows, and then right here, higher high, higher high, higher high, higher high. You get the point. That's when the trend changes. So that's when you would look to take profits, is somewhere down in here. Probably right here to right here is when you'd be taking your profits, because the trend changes. But this gap down first red day is one of my favorite strategies trading penny stocks in the market. And this has a 90% win rate. And you'll see on a lot of my videos, gap down first red day. And it's a low stress trade. Like, you don't have to be like, oh, it's going to bounce, it's going to do this. No, the stock's going to get crushed. That's why I say you have to take your profits within the first hour or two, because once a trend changes, it's going to start upticking. So this gap down first red day, if I were to pick anything out there for a beginner trader, anybody under the PDT rule, this strategy, gap down first red day, would be what I would tell them to trade. This has a high probability win rate. And then, so you got to see the gap up. Well, it's a gap up. And what I mean by that is, let's go back to EYG. You can't just short any penny stock, because every penny stock reacts different. And I'll give you two examples right here. EYG. When this stock spikes up, when it spikes up, gaps up, you have to see how the stock reacts on the charts when a stock does that. So when this stock has a massive gap up, look right here. Okay, this has a massive gap up. What's the probability of the stock closing red? Pretty good, and I mean massive. This is massive. This is massive. This over here, there's no gap ups, and it's not a massive move, and there's no volume. So I mean by massive, this is a massive gap up. This is a massive gap up. So you have to be really patient on the stocks that you trade. So to give you another example, SSI. Now this is where I mean, look at the chart. So this stock has a massive gap up, right? When it has a massive gap up, you can tell over here that this is a multi-day runner. And when it has a massive gap up, it just told you the day before, when this thing has a massive gap up, it tends to close green. So if you're shorting the stock, the odds of the stock closing red is not going to happen. And the volume is higher. So this right here tells you, the probability of this stock, when this thing has a massive gap up to close red, it's probably not going to happen. Right here, and this is a multi-day runner. So that's what I mean. When you're looking at these stocks to short, you have to look at the 1-year chart to see how this stock reacts when it has a gap up, gap downs, to put the odds in your favor. If the odds are in your favor, you shouldn't even take the trade. So what I'm looking at on SSI is this. This shows it's a multi-day runner, right? You can visually see it's a multi-day runner. But here's where that gap down first red day comes into play. I'm going to show you 2 examples on this stock right here. Massive run up, and then this is its first red day, right? You can visually see that this is its first red day at 9:30. Right here, gap down. So this right here is the same strategy I just showed you. This strategy is the same strategy I just showed you on that other stock. Let's see here. Let's see. Why am I drawing a brain fart? So I don't know why I'm drawing a brain fart. Dun 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 dun. Oh yeah. EYEG. Sorry about that. So this is what I'm talking about. Massive green, or massive first red day, next day gap down. This is the same strategy as that I showed you on that other stock, is right here. You wait for that first red day. It has to show you it closes red. And then the next day you wait for that massive gap down. Right here. Same strategy, just different stock. This right here, 90% win rate. You wait for that first gap down, and you wait for that first red day. Right here, same thing. Massive run up. It has a gap down. You can visually see that gap down. That is very bearish. Stock closes weak. Gap down, stock closes weak. So that's why I say this is my favorite strategy to use. This is a 90% win rate. Right here, gap down. First red day. Like this is when the trend changes. So what I look for in the penny stocks is I look for stocks just like this on SSI. That this thing is just pushing up, just like this. You just wait for that thing to start pushing up. And you wait for that first red day. The stock's got to close red. Once the stock closes red, you wait for the next day. Once the next day happens, you look for that gap down. like this, you know. And then once it has a gap down, that's when you short the stock. So let's just go back to this day. 6-3. I don't know if I'll be able to get that on my charts. Intraday. So we're in 11-6. Yeah, it ain't gonna work. I'll show you. Let's look for a recent one. There we go. HEPA. Time. Church good. So actually, KRTX. This is a great example. This is probably one of the perfect ones. Get rid of all these. Okay. So KRTX, you guys all know about the stock. It has a massive gap up, closes strong. Next day, same thing, close strong, right? This day right here, this is the gap down first red day strategy between these 2 days. This right here, 90% win rate. So stock opens up on 11/20 and closes red. So this technically is the first red day. So you wait for the next day to open up. The next day the stock opens up, it has a massive gap down. It has a gap down. So on this day is a day you want to be shorting it. This has a 90% win rate. So you wait for that gap down, first red day, and then you wait for the gap down. So let's go into the charts and I'll show you. I hope this is not confusing. So you can visually see this right here on this day was its first red day. After 2 days of running up, this is its first red day. The stock closes red. The next day, it has a little bit of a gap down. Right here, once it breaks 108, the stock gets crushed. So that's what I mean. Gap down, first red day. So this is the 90% win rate right here. But you have to be patient. You have to let the stock tell you when the trend has changed. So right here, gap up, close strong. Right here, a little bit of a gap up, closes strong. So that's what I mean. Is you have to be patient. You have to let the stock, the chart, tell you, okay, the trend's done. It's no longer gapping up, and it's no longer closing strong. You know, like right here, it went from 130s to $2.15. You know, and it took 5 days to get there. But once that stock closed red, that's when the stock finally closed red. Now I look for the next red day, and I look for that gap down. Once it has a gap down, okay, now this is where you short it, because you're not guessing anymore where the top is. The chart showed you where the top is. So what I mean. So 9:30, we can pull that one up. Let's just go back to that day. So 90 days. Let's just go back to 9:30 so you can visually see this. 27, 9:30. So right here. So this has that run up, what I was talking about. This is what you look for. This is the perfect example. right here. You can visually see it has the gap down, right? Right at the open, it cannot break the previous day closing price. So you get short right at the open. It doesn't matter where. You just want to get as close as you can to the open, and then you can hold the stock all day long. And this is what I mean. You wait for the stock to show you when it's done, and then look at this day. This is the first gap down. It just gets crushed. So this is my favorite strategy. The entire, out of all my strategies, this is the favorite because this has such a high win rate. This is how you can separate yourself from gambling. But this is my niche. I'm not saying this works for everybody, but you have to be super patient. All I do is I just look at the chart. Whatever the chart tells me is how I trade the stock. So, them are my two favorite strategies. That's pretty much all I basically trade is those two strategies. I just look, realistically, I just look at the chart, and what the chart tells me is how I play the stock. This chart right here tells me this stock's a multi-day runner. So am I going to go in heavy shorting it? No. Why is that? Because it can run for days. I don't want to be on the front side of this move. I want to wait till the stock shows me the top, and then I want to short it. So Monday morning, am I going to short the stock right away out of the get-go? Nope. But if it has a gap down, you better believe I'm going to be really interested. Because right here, if this shows me a gap down, that means the trend's changed. So that was my... I hope that makes sense. If it doesn't, leave it in the comments like, hey, that really didn't make sense to me. But I thought I explained it pretty well on the first day, the first red day, and then the gap down the next day. To go over my charts, I'm going to have to use SSI. So we can get rid of all these lines because this is just going to get confusing for you. And what I mean by how I trade off the chart is I just look at the patterns. Whatever the pattern shows me is what I do. So let's look at SSI because this was my trade from yesterday. So this stock had a massive run up the entire day, but look right here. Right at the close, this stock showed me that it usually has a 50-cent pullback right at the close. So yesterday I was watching the stock and I started shorting at 485. Why is that? Because I was expecting this to happen over here. That's it. And what happened? This happened, and it happened over here. And I took small size. Why is that? Because this stock's not known for closing weak. It's not known for getting crushed. Because it hasn't showed me that yet. So I'll pull up my SSI chart. I just took a picture. But you can see right here. This is where I got short. And then I covered right here at the 470s. So you can see like how I trade. I literally trade off the charts. I just put 2 and 2 together. How does this stock normally close? How does this stock? I just simply look at the chart. All the answers lie in the chart. That's it. So I took a really small position size. And all I was doing is just expecting this to do what it did over here. This is just a test. Like, hey, I see this, so I'm going to try it over here. But I'm not going to try it with big size. I'm going to try it with small size because if I'm wrong, I'm only going to lose a little buck, a couple bucks. All I do is just test the theory. And this theory worked out perfect. And it's like, hey, that's awesome. So that's exactly how I traded that stock. And then on HEPA, I was telling everybody in the chat room that you could be shorting the stock. Look at this. So the previous day closing price, this had a gap up. So I don't like that, but it should still have its first red day today, and it didn't. But right away in the morning, that first hour or two, that's when you could have traded the stock. I was telling everybody you could be shorting at 350s, 360s, 370s, and I missed this trade due to work, which is phenomenal. But I missed this trade, so I didn't trade it over here. I started shorting the stock over here, expecting it to close red, but it didn't, and I made a little bit of money yesterday, but not a lot. But this play right here would have been the play to short the stock on. And then I'll show you that chart. So as you can see, I missed this play. And I was like, man, maybe it'll give me a second chance. And then when I see it start pushing up, I'm like, okay. So I shorted here. Then I shorted here, and then I covered here. Why? Because I was wrong right here. And I took a really small loss. And then I started shorting this pop. And then I covered right here, 358. So that was a scratch. But all I did was just test that theory out. So yeah, that was my trade on HEPA. And then my P&L, $26. That was it. But you know why it's so low? It's because I just test a strategy. I don't go in big when I know, for one, that the trend is an uptrend and I'm shorting it. You don't do that. And then on SSI, I was shorting at the close because I seen in the charts that, hey, at the end of the day yesterday it had a strong pullback. So I was just testing out that theory on SSI, and it worked out great. If I would have had big size, that would have been a big winner. But I didn't go with big size because my strategy tells me that the stock's going to probably close pretty strong. So I was just trading it off of what I seen right here. I was trading it off here. It was just, I simply just had a theory. So all I do is, like I say, to break it down in this video, just the easiest thing I can say is just look at the chart, and all the answers lie in the chart. That's it. Every single day, the answers lie in the chart. You just have to look at the previous day, the previous year, and yeah, that's how you trade them. So I guess until next time, traders. It was a long video. If anybody made it to the end of the video, leave on there in the comments, made it to the end. And if you did, awesome. And if you didn't, obviously you didn't really want to learn my strategy. And if I can make the strategy, if it was confusing, let me know in the comments. Hey, the strategy is how you explained it was confusing. Can you make it simpler or whatever? But until next time, traders, peace.